Trent Bradshaw with Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Today is March 18th, 2020. Two things I want to touch on today. Obviously the market volatility and interest rates. And then secondly, let's talk about bid-ask when we're looking at stocks, stock ETFs or exchange traded funds, or looking at bond exchange traded funds. When we look at the overall interest rate environment we're in right now, what you can see from this chart, and I'll have this circled, is rates went as low as 0.34 on the 10-year note, which is historic. It's never happened. And then we've spiked back up in a short amount of time back to 1.26%. Well, what that does is put pressure on the fixed income market, and you'll see bonds come down in value at a pretty quick rate over the last week or so. But what we're looking at is we're also looking at some instability between a bid price and an ask price. The bid price is what someone's willing to buy something from you for. The sale price or the ask price is what a seller is willing to sell that particular security for. Right now in the fixed income market, we're seeing about a 5 to potentially 10% spread in some cases on these exchange traded funds, which means you have to be careful if you're wanting to place a trade in those particular funds. We're being very careful in monitoring that. We're not making any drastic moves. We also know that the underlying securities, we're pretty much getting priced at a 10-15% discount on some of these bonds right now. And that 10 to 15% discount is something that can come back if we get stabilization inside the bond market at this point. So just be aware of that. We see that occurring across the board, even with some of the most liquid bond exchange traded funds in the market. So if you've got any questions, any concerns, give us a call. Trent Bradshaw, Bradshaw Financial Planning. Mind your money. Have a good week.